welcome. This is News Now. I'm Shabani Gharat. Now, days after Union Budget 2026 announced a steep hike in the Securities Transaction Tax or STT on equity derivatives effective April 1st, NSE management has flagged that hike runs contrary to expectations of relief, particularly in the cash market, and said it has urged the government to review and rationalize the levy. Now, STT on futures has been raised sharply, while taxes on options, premiums and option exercise have also gone up significantly, increasing trading cost. Market participants warn the move could hurt liquidity, especially in segment that accounts for the bulk of daily volumes. Broker Body Association of National Exchanges Members of India, ANMI, has also sought a rollback, cautioning that a higher STT could reduce market participation, disrupt price discovery and undermine ease of doing business. To discuss this and more, today we are joined in by CA K. Suresh, National President of ANMI, and Uday Tardarkar, who's the Chairman and Independent Director, Rose Merck. Over to you, coming to you, Mr. Suresh. First of all, welcome to ET Now. How much will the total cost of single futures trade increase for retail broker from April 1st if this happens and if this goes forward?
It is almost crossing 80% of the total cost, STT, because of the steep increase, particularly in futures. As we told many times that the cost of trading for investors in India is going up. It is necessary that we have to shift the people from futures and options market to cash market. For that it is necessary to reduce the STT in cash market. So automatically the migration will happen. Instead of, improving, rather increasing the STT, we should consider the other measure, namely reduction of STT in cash market. Because cost of trading, if you reduce it in cash market, then people will love to trade more for their own savings purposes or other wealth creation purposes, which is essential for a country like India. So that, the spread of wealth creation will go up like anything if you do that particular exercise. So our request is that please consider the reduction in STT in cash market rather than the fundo. Because already it is a well-known fact that market, our participants, all participants, including exchanges, brokers, we all lost heavy volumes because of earlier removal of weekly expiry of bank and other Nifty, etc. So now we are having another blow. So this is also going to definitely affect the volumes, and it will also have an effect in our income. Further, it will reduce our earning capacity also. So not at the cost of losing rather money by somebody. That's not our aim. Our aim is that let us educate the investors, or let us bring some entry barriers for the educators, rather investors, like, cooling period of 6 months we can prescribe. After 6 months only, the eligible investors can do trade in the fundo. Like that, we can bring some modifications.
Right, Mr. Suresh, point taken. Hi, Ankur this side. I want to come to you, Mr. Uday. Now, for budget this time, there was a steep hike in STT, but CTT, that is Commodities Transaction Tax, remains as it is. In fact, it has remained the same level since 2013. So on one hand, if the argument is of speculation for STT, why not in commodities?
Absolutely. So from the policy perspective, aligning STT and CTT reforms would have a signal coherence. And the real objective is to curb speculation and reduce systematic risk, ensure that sustainable participation. The coordinated review of transaction taxes across asset classes was essential. And it is looked at very isolated manner. And probably that approach is skewed the capital flows. Adding one couple of more points here, right, Mr. Suresh was talking. The SEBI is actually driven by that 93% losses by the retail investors. So in that context, access to the complex derivative products can be filtered through income, experience, or qualification-based ratios, rather than restricting outright. And high-risk instruments like weekly options may warrant suitability-based retail access years akin to KYC threshold. So overall, the cash market also is affected because of the high bracket also is affected because of and even the option now. And even the volumes now. So really dry up. Volumes really dry up. You need even the certain speculator to remain in the market from the liquidity perspective.
Absolutely, Mr. Uday Tardarkar. But sticking with you, how do you balance, this entire? Is there a solution to all of this? Because of course there is a government goal for investor protection, but at the same time, if there is a need for exchanges to maintain and the market to maintain liquidity, is there a balance out of this situation or a solution that may emerge going forward?
No, but you really looking for a reform kind of a thing, penalizing one market and is actually skewing in one favor. Actually skewing in one favor. If you want,
Right.
the real.
Right. I think there is some audio issue with Mr. Uday. We will sort that out. But in between, I want to come to you, Mr. Suresh. The point you were mentioning, and I suppose you have written a letter to Finance Minister as well to review the STT rates. Do you think there is a case to consider differentiation between futures and options and not look through at the same lens?
Yeah, see, to some extent, the differentiation is there definitely because in options, if you ask me frankly, no need to increase at all because already the loss is ascertained and full margin is there, total margin is there, all types of protection is there, everything is there to take a call on the options. Only in the case of futures, of course, there is a problem, but the increase in futures also very high. I think you know very well that futures are definitely a hedging instrument. Of course, speculators are there. I'm not denying that. Without speculators, no market is available in the world. Speculators should be there for getting better pricing and giving depth in the market. We need them also. Otherwise, the market will be without any momentum. What I want to tell you is that loss reduction you are seeing in isolation. There may be individuals who would have had positions in cash market. At the same time, the loss may be in the futures market. So you have to see the combined position of these people. If at all it is worst, then we have to bring some tweaks in our eligibility criteria. Increasing the STT is not the solution in my opinion, humble opinion. We should think of bringing some entry barriers for them so that, we are making an educated investor getting into the fundo. So that's why the options are different.
Mr. Suresh, Mr. K. Suresh, if you can help us understand, in your letter, what are some of the points of rationalization that ANMI has proposed, in representation for, like a proper and adequate solution to this issue? What are some of the highlights and what are some of the issues that you are raising? If you can help us give an insight into that.
See, we just, made them to clear that STT is just, what they have done is steep increase as far as futures are concerned. It consumes almost 80 to 85% of the cost of trading, which is unwarranted because of, it is an instrument available for many players to have a hedging also. If you see the number of players, rather who are volume-wise, I am talking about volume. Individual volumes are negligible actually. The volume-wise, it is by other, for FPIs and others only they are playing because they need that cover for their position in the cash market. So we are consuming that volume is more, the robustness in F&O is more. That's why we want to curtail it. No need of all those things actually. Already, that is the first reason. Second reason is that every brokerage outfit is totally affected because of drop in volumes. Even exchanges are also affected. Even we are also, broking community also totally affected because of drop in volumes, which ultimately kills the survival of the industry. It is an industry. We should call them ourselves as an industry participants actually, not intermediaries. So when you have such industrial participants, we have to encourage them to bring more and more capital to our growth, and we should expand our financial inclusion to all Tier 2, Tier 3 cities. So like that, our plan of action should be towards that, not curtailing the speculators. Speculators will come down drastically only if you shift their mindset. You have to shift their mindset. That's what we attempted in our representation also. That can happen provided you create a avenue in the cash market. Please bring some reforms in cash market. Naturally, people will love to invest, love to create more and more wealth. So that's how the momentum we have to create. Once that happens, people will all this, as I said, volume-wise, individuals are very less only in the F&O market. So they will make a sweet, rather small shift towards the cash market. Ultimately, the what is called SEBI's or government's intention of protecting the investor will happen. I mean, so very, very, very nicely it will happen. So we have to think like that. For example, cigarette, we are going on increasing the price according to the length, etc.
Right,
Every year.
right, Mr. Suresh, point well taken, and you have quite a bit elaborated on the things which can be done. I want to come to you, Mr. Uday, if I'm audible to you. Now, there are solutions which are there on the table. I want to understand, first of all, has the representation already happened? And how much of the scope you think that there can be review on STT?
See, if we have heard even the revenue secretary on the budget day, their intention is not to collect the revenue, but they want to prevent the individuals from making losses. Now, I'm pointing one thing here as far as the individual is concerned. The kind of the investor education happened across the country. You have seen we have a solid number, even the last number what we got of SIPs, which is in the range of 31,000 per month. And say from 2013, what was the monthly collection of SIP? The investment has come to more than that in a month. So from 2013, what was yearly contribution to SIP, we have come to monthly. So the investor is matured enough; he knows where to go, where not to go. And if you at all you want to prevent from this, see there are if you look at the commodities market for last 1.5 century in India, the likes of Premchand Roychans, they were the one to decide the cotton prices, gold prices those years. And our traders have been wise enough to take care of this. So in that context, it's like something like referee stopping the game instead of penalizing somebody who's doing wrong. So I think from that perspective, something is need to be looked at.
Thank you so much, both gentlemen. Thanks for joining us, Uday Tardarkar and Mr. Suresh. Thanks for joining us and giving your insights and inputs on the STT hike. Thanks again.
Thank you. Thank you.